when calculating your mortgage payment, there are going to be four main parts that you want to consider. Don't mind my crooked fingers. But these four main parts can be remembered by an acronym called PITI, P-I-T-I. I have pity for some of you guys with how big of your mortgage payment it is. But anyways, principal, interest, taxes, and insurance. Now, most people only think about the principal and interest, but taxes and insurance can add hundreds of dollars a month. In some cases, I've seen taxes and insurance add thousands of dollars a month for some clients. That's crazy. Now, let's run a real example. So let's say you're buying a $400,000 home, which is pretty average here in California, and you put 10% down. That's not always necessary, but 10% down payment is pretty solid. So at this point, with 10% down, you're going to be borrowing right around $360,000. And let's assume your interest rate's right about 6.8% on a 30-year fixed loan. Your principal and interest payment is going to be roughly $2,350 a month. Now you can calculate this self on Bankrate, NerdWallet, or my favorite here is mortgagecalculator.org. It seems to work really good for me, but these are all free and fine options. Now, when looking at your property taxes, they vary based on your location. In California, you're typically looking at 1.1% to 1.25% of the purchase price annually. So this means on a $400,000 home, that's roughly $4,400 to $5,000 per year. And this breaks out to about $370 to $415 a month. And that's going to be added right on top of that $2,350 that we mentioned earlier. So remember, the taxes are not included in the principal and interest right off the bat. You have to actually add these on and calculate them. A good side note about taxes is every year your property taxes will more than likely increase. If the market's appreciating, then your home's going to appreciate in value. This means that your assessed value is going to go up. But the good thing about California is that they can only increase your property taxes by 2% every single year. So let's say you have a $100,000 home, then next year it could be assessed for $102,000. So you'll take a small increase in your property taxes, but at least it's not going to be, a 10 or 15% increase, which is the same rate that your house might be appreciating at. Now let's factor in homeowners insurance. Typically, this runs from $100 or $200 a month, but this really depends on where your home's at. Up in Oakhurst, up in Coarse Gold, that price can be somewhere closer to $300 or $400 a month. I see some clients who are far up in the mountains that get $500 or $600 a month just because it's such a high fire risk. If you put less than 20% down, then you'll have another type of insurance, and that's called PMI, private mortgage insurance. Now, this is typically, 0.5% to 1% of the total loan amount per year. So that's going to be another $150 or $300 a month if you have a $360,000 loan. So that's going to be something else to consider: principal, interest, taxes, and insurance. But there's multiple types of insurance that you have to factor in. So in our example, you first have $2,350 for your principal and interest, and then another $400 in taxes every month, and then another $150 in homeowners insurance, and potentially another $200 in private mortgage insurance. With all of this all in, you're looking at roughly $3,100 a month. That's including everything for your home payment, of course. Now that's the real number, not just the starting at number that you see in ads, not just the principal and interest number that you might see a lot, but this is going to be all in for your total monthly house payment. So today, current rates, as of middle of 2026, they're hovering right around that mid to upper 6 range for a 30-year fixed. But this can really shift day to day, month to month. As you continue to shop, it's important to talk to a few different lenders, see what special programs they can offer, see what special interest rates they can offer, maybe discuss the options of buying your interest rate down. This way you have lower monthly payments. Having all these different options available to you is really going to help you save money in the long run. My biggest recommendation here is to bookmark a mortgage calculator. My favorite is mortgagecalculator.org. Run your real numbers, and then let's talk. Because knowing your payment is a step one to knowing which homes are actually in your range. If you have any questions, feel free to drop them below.